Hey, welcome back to another episode of OX Research. We're live. It's Friday the 18th. Joined by my co-host Boccaccio after his very successful AI personality launch last evening. Also joined by Mark Arjun and Carlos from the research team. And we've got Tolks on as well, friend of the show. How's everybody doing today?
I'm very well, Danny. Thank you for asking.
Yeah, I mean, crypto market cap hit an all-time high of $4 trillion today, so very happy.
No other strong thoughts.
Great. It's just how your day's been. Can you just tell us how your day's been? What the
Sounds
hell?
like we're depressed. Everything is ripping. I'm hearing all of the assets are ripping right now, and we're so depressed in here. What's wrong, Carlos? Tolks, tell me what's wrong.
Yeah, I don't think all assets are ripping, man.
Not your bags.
I think ETH is up. ETH is up too much. It just dampens the mood a little bit, you know?
Yeah, I'll say I'd have to go find the message from David Hoffman in the 0x Research Telegram chat, but he did mention there's kind of a funny feeling about Pump bleeding while ETH is ripping in the recent week. A bit funny given at least our predictions maybe a couple days back, week back. Not looking so great in the short term. We'll see how the coming weeks go. But there's been a ton of news. I don't know. We could talk ETH, but we could also talk some of the other like retail assets. Like we're getting into a little bit of like a retail excitement kind of move here again. It seems like some of the classic names, XRP, XLM, Algo, H, like you name them. They're all up significant amounts on the week, like 30-40%, if not more for some of those names. And the last time we saw that happen was like post-election last year. When, I mean, post-election, pretty much everything ran, but some of those tokens really ran quite hard. It's interesting to see that again. I don't know if anyone has big takeaways here other than like, I don't know, is retail back in now that like the Treasury vehicle mania is picking up?
I just want to say, like, ETH's up like 40-something% in the past month, and everybody's like, why? Oh my gosh, ETH, it's so bad. XRP, Cardano up 40-60% in the last month, and nobody's saying anything. It's not like it's a hated rally, right? So it could be for the same reason. ETH's pumping. I think when ETH pumps, like if we just go back to last cycles, which I mentioned I'm no longer a believer in, but if we go back to last cycles, when ETH pumps, everything else follows. So I think, talks like ETH going up is not bad. I think it's good for everybody. They just not everybody realizes it yet.
But no. Yeah, you're definitely right. That's more jokes to the top. I mean, seeing ETH pump is, I don't know. It just kind of gives the market a ton of confidence. And I'm sure we'll talk about it plenty throughout the show, but like the whole cycle theory too, like I did a live stream like 2 months ago, and I was kind of just like, I don't know, what if it does play out that like BTC is kind of stalled, ETH BTC goes straight up, like Doge started to move pretty hard this morning. Like it's kind of the classic as far as, out the risk curve, like, BTC reaches new all-time highs and then ETH goes up 35% in a week and stuff's starting to kind of spill over to, I don't want to say like the later stage type stuff, but I do think it is interesting that kind of that, I don't know, the way it played out all the previous cycles, everybody was so adamant. And maybe like I'm more of a believer in BTC cycles at large. are mostly done too. It's obviously gonna, wax and wane, but I do think it is kind of interesting that like once everybody says, the cycle's over, like that rotation from BTC to new all-time highs chills out. ETH goes up 35% in a week. Like I said, Doge starting to move this morning, like alts in general. Kind of how Danny mentioned about all the, retail favorites, like up 30-40% in a week. Like it is pretty classic, like cycle of previous history, which I think is pretty interesting.
I think people are nervous because every time ETH pumps, everything else goes down. It was like the atom that we had last cycle, and we had it with ETH this cycle. But everything seems to be going really, really well, except for Pump. Pump is going for that.
What do you mean?
Yeah.
It feels toppy? Is that what you're saying?
No, everything feels really good.
Okay.
I think the difference with ETH moving now, compared to the past like 3 years is like the inflows and the treasury companies like kind of support it. First, in the past, it was more just like perps and like people just begging and wishing versus kind of actual, institutional flow behind it. So I think that's a major difference. But yeah, I mean, people are still going to be a little iffy when ETH pumps just because it's been, 3 years of people using that as like a downside hedge, and they're long BTC, short ETH, long anything, short ETH really. So a lot of that has unwound, but yeah, people still get slightly nervous. But again, like it seems like it makes a lot more sense now.
I mean, it does feel a bit frothy, no? Like with all the treasury companies, I think they announced one for Litecoin yesterday. That's just ridiculous, no?
Much higher. We're not there yet. I want treasury companies for Axie and shit. This is not it.
For Axie.
Like tokens.
But treasury companies aren't that risky for the underlying asset, right? I mean, like a lot of them don't use debt. Like MicroStrategy is probably the one that uses debt and preferred shares the most. And so then if things turn sour, they just dilute shareholders. They're not going to like be forced to sell the asset. They're going to be forced to dilute shareholders, which is what all of them do and have been doing, even the most successful ones. So I think selling the underlying assets is last resort. But I do see what you mean, Carlos. Like Litecoin, Treasury Co. I saw Dogecoin, Treasury Co. announced yesterday 500 million for that, $500 million. But for Doge, I see that. But I don't see any. I don't think it's as risky as everybody is making it out to be.
How can you say this is? This looks profitable.
There we go. Yeah, now we're talking higher.
I think to your point, Mark, like the risk may not be necessarily there today or like immediately, but I think it's just another thing that will play into reflexivity to the downside if or when it comes, right? You mentioned like as a last resort, they might have to sell the underlying. Well, it's like, I don't know, we get to last resorts quite frequently in this industry and often more quickly than we expect to come. Just a few months back, right? I think there were probably some people who were on, last resort with maybe perps position getting liquidated when we, kind of gave up a bunch of gains following the election. But yeah, I don't know. It's a tough thing because it's like, yeah, they'll just sit there and dilute shareholders and like dump on their heads and like, might not necessarily blow up. But I do think we talked about it a little bit of like, if you get to a point where nobody can raise anymore and they're sitting around and maybe the valuations slump a little bit, like, I don't know, you could either get stuck in this downward reflexivity loop, kind of like the upward reflexivity loop that we're in right now. We tend to like do both of these things, never in half measures. It's strong on the way up and then strong on the way down.
Can I say something, Mark? James Christoph is very upset with you because you said it's not as risky as people think it is. Just FYI, just so you know.
I will pull up though. We're talking, I don't know about like froth, but I guess just in terms of like how the ETF inflows look. I mean, they look much, much stronger in the recent week than they ever did at the end of last year following the election. There's a ton of interest now, and maybe part of that is fueled by, the treasury co's are getting in. There's been a big move. People want to get some exposure here. Maybe they're chasing. I don't know if like these treasury co's, I can't imagine. Are they buying the ETFs for some of their exposure? It doesn't seem like that they would. I don't think that they are. So this must be like some chase activity from maybe retail in their personal accounts. But interesting to see like this magnitude of flow, near billions on the daily in the past week.
Oh, it's been insane. I wonder if it's just, I mean, like, is that Tom Lee cosign? Like, how much does that? And I do think, like, going back to 2 weeks ago, I think we kind of briefly talked about how like ETH leaning into the stablecoin chain narrative. Like, I do think that's a very easy thing to get across to people, especially after Circle's performance, and you can kind of just make an easy case to like, hey, you should buy some ETH, long some ETH because of the growth of stablecoins. So I think that narrative has really done a lot for them too. And then, yeah, I mean, Tom Lee just he's got some sway apparently, huh?
It's funny. I'd have to pull up the BMNR chart, but he seemingly has some sway, but his co is not the one that's moving lately. I think SBET has been on the Ripper, although after having a bit of like an Eiffel Tower a month or so back.
Yeah, and then BMNR kind of has the Eiffel Tower now, so we'll see how that plays out. But yeah, I mean, it's just been, I don't know. I mean, every day it just gets a little more crazy, and the thing about froth, like in markets and especially in crypto, like it's just, you don't necessarily want to be early to calling the froth because the levels of insanity it can reach are, I mean, like we've seen in previous cycles, it's I don't know, it's kind of beautiful in a way. Even for what eventually comes after it, yeah. But it's beautiful in the meantime.
Yeah, I do think we're in a bit of like, I think you would have a lot of people who trade meme coins, going back to last year. There was this similar, they're all going to go to zero. You guys are like burning your money, but it's like when they're going up, like, I mean, you want to trade them. And I think a lot of these treasury vehicle companies, it's the same kind of vibe. I mean, I'm I'm personally trading some of the smaller ones, like, taking some risk there, but it's just what happens. Like people see, these things make big moves, and then they want to follow and chase that on the next one. They want to be early to the next one. Maybe jump into some other things. I think some big news, or I guess relatively big. I think the Genius Act we've kind of been seeing coming for a while now. Looks like that one just got passed in both sides of Congress yesterday, and supposedly Trump will be signing into law today. So that should be relatively a good win, I think, for the longer term picture for crypto markets. Another interesting one that just passed the House, I believe, the other day is the Market Clarity Act, which I think there's some more nuance there, but the main pieces to the bill are around like defining what is a commodity versus a security, and being very explicit about something being a digital commodity versus maybe not quite meeting like commodity status and needing to kind of file and register with the SEC. But kind of splitting up some powers here, giving the CFTC some authority over these like quote unquote digital commodities, which, you think some of the big ones like big blockchain network tokens, Bitcoin, ETH, Sol, I don't know, you could probably list off a bunch of these at this point that probably fall under that purview. But another thing that gets called out is like, what is a mature blockchain system? And they're trying to like define language around like a network that becomes demonstrably decentralized, basically like decentralized enough to the point to where they feel that the token itself then meets this commodity status and doesn't have to be regulated by the SEC. I think there's like some kind of win in there eventually to get some like actual clarity on this, so teams aren't sitting around like, I don't know, are we going to get sued? Are we not going to get sued? But I don't know that we have like the full picture of how this is going to look just quite yet.
I don't have any regulatory takes. I want to talk about Pump.fun. Is that okay, Danny?
Yeah, we can do Pump.fun. Get into it. What's your take right now? Hot.
I think Fuck, you put me on the spot.
He wasn't even ready, and he asked for it. That's crazy, man.
I'm curious what you guys think about. Well, I asked this to Ryan Connor this morning as well. He said, "Relax, don't worry about short-term price action." But I'm very stressed out about short-term price action. That's like my whole thing. But more so, I'm kind of wondering if, how serious of a threat is it that they just never get back the activity that they used to have? Talks. I know you talked about this last time, Carlos, you as well. B, like on Twitter, you can see that the original sale was supposed to be around 200 mil to funds. Instead, it was up to 720 mil, which is quite a bit to sell to funds. And these funds are completely unlocked at like they have no vest. So I'm just kind of curious, like, do we think it's a churn thing? Do we think it's going to all be okay? Is my entry safe? Et cetera, et cetera.
You sold what entry?
Yeah, that's true. But I wanted to give a dramatic effect as if I still have skin in the game, when the reality is I sold. I was down. And I was like, I can't fucking deal with this anymore. No, Toltz left. He heard that I sold.
He died, man. Carlos, Mark, is my entry safe? I still hold pump.
Depends on if you're on leverage or not. I mean, funding rates were crazy. I do think there's a bit of truth to what Ryan was saying. Like, funding rates in hyperliquid were above 100%. So I think the consensus was pump was going to just double the first week of trading, and everyone's going to like be rich. And we all were wrong, I think. I still hold my pump. I'm not comfy here. But like, yeah. I don't have a lot of takes besides that. We were all wrong. I don't know what else to say.
All right. Kind of curious. I want to pull up this. Mark, do you have a take?
No, I don't have a take. I was away on an island when the pump ICO happened, so I didn't even have the option to buy it.
And you decided on not buying it on the public forums?
No, I mean, I just did a quick backup napkin math. I saw pump was the most valuable / expensive application that doesn't have its own chain, and I was just like, I don't know if I want the most expensive app, so I'll wait and see.
That's fair. Danny, are you on the Launchpads thing on Blockworks data, or do you want me to pull it up?
Yeah, what do you want to see?
I just want to share this a bit.
Dude, light mode? What is this guy?
I don't think this is live yet, and I might actually get in trouble for this, but I mean, so this is like, I don't think we should be doing this, but it's been like 2 weeks of Bonk. 1 week of Bonk doing really, really well. 10 days, 15 days of Bonk doing much, much better. We see a lot higher graduation rates from Bonk. Launchpad tokens are there's more Launchpad tokens on Bonk, and revenue for Pump.fun is much higher than on Pump.fun, which is kind of, and I agreed with you. I mean, Mark, I imagine they're going to launch Pump Chain at some point. Don't know how it will work, and I don't know if it fits into that like theory that Ryan has, that's you want assets to be close to each other. Do you know what I mean? Like, you want asset issuers and the protocols to be close to each other. To be honest with you, I kind of agree with him on that. If you're doing like a specific, like an application like Pump.fun, I think there's only certain applications that you don't need that with. But I don't know. I know I'm kind of bear holding at the bottom here. Probably like it's been beaten down quite a bit, but I think I get to do this because I sold a little bit earlier. But I'm not sure. I don't know. Danny, are you comfortable?
I feel relatively okay. I think the big thing that Pump has going for itself is they just raised a ton of cash. So, like, to me, the thing that I'm looking at, and like the token that I think would even be more interesting, is like Axiom in this position, because for them, like, this little battle between Pump and Bonk Fun, doesn't really matter. They're just kind of hanging out. they're driving like 60% of the flow, if not more, to both applications in aggregate. And so like they kind of win no matter which of these two like kind of giants at this point ends up like coming out the victor. So, but yeah, I don't know. I think like Pump could, they have leverage here. Like they have things that they can pull on. They could make some relevant acquisitions. I think the thing that they really need, and we've talked about this a lot, and Ryan Connor has been laser focused on this, but like they really need to own the front end, because if all the flow is coming from Axiom and Photon and Bolex and wherever else, like it doesn't matter if you're Pump or your Launch Lab or your Bonk.fun. Like, you know, there might be some strings they can pull a little bit with like getting the mass token creators, you know, to use their platform. But what happens in the future situation where like Axiom launches a launchpad and all the users and most of the volume is going through their platform already?
I want to ask a question I asked 6 months ago about Pump, but for Axiom. Why do they need a token?
Yeah, I'm not sure that they do.
We can't do this. I can't do this question 5 years in a row. We have to admit that everything needs a token. If we don't start from that place, then it's already cooked because you're questioning too much. It doesn't work. You have to start from the thing that like, oh, this is on or related to crypto or potentially could be related to crypto. It needs a token. If you don't start with that, then we're getting into way too many questions.
I think we can talk about will they have one though, and I think for them to launch a token, like they would be breaking trend. Like trading bots historically have not launched tokens. Like Banana Gun stands out. There's maybe a few others, but like typically the leading bots have not bothered to drop tokens, even when they've maybe promised or hinted that they would, or done points programs, or even mentioned that a token was coming in the future. Cough, Photon, Bolex, awesome stuff, guys. And Axiom even has in their own docs, like, I mean, they have a point system, they have a reward system, they've got some subtle nods to a potential like future airdrop in their docs, but yeah, I don't know. For them, I mean, you'd have to break trend and you'd give away probably a chunk of your revenue in doing it, because that's what the market wants. So,
but the thing with the token is that if you don't need to have a token for some form of decentralization purposes or like regulatory purposes, and you don't need the money that comes from having a token. And I think this is why Photon and Bullx never did it, because you don't need, like, if you're making, God, I don't know how much Photon made. I think surely above 50, 60 mil, right? And I can't imagine their team being more than 5-6 people.
Yeah, I mean more. Lifetime, it's done more than 9 figures.
Okay, I was gonna say, I think it might be like 5x that. But yeah. I mean, like so, what you're talking about.
If you're making that much money, there's side talks. If you're
good,
it makes, and you don't need other money to get a salary or whatever, however, like, or to exit really, or to like live or whatever, then why the fuck would you ever? Because you're just giving, it's such an added complication. I can't imagine. I can't imagine this ever again. Sorry, folks, continue.
You're good. No, I do think it is a good point though, because like, you know, Pump launches, and then I mean, when you're making this type of revenue with a 4, 5, 6, even 10-person team, immediately the token launches, and what does everybody want? Everybody wants revenue and buybacks to the token. So like you're immediately just cutting off, you know, 25% at minimum of your revenue. I mean, I think a lot of people with Pump like are kind of pushing for upwards of, you know, 50% plus. Like, so the incentive for the teams is kind of just to be like, well, why would we not just continue raking in revenue? And then, like Box said, like, I mean, the regulatory aspect is much more clear now. But I also, the downside of the regulatory being so much more clear is that if I was on a team of a potential token, like I wouldn't be worried about the SEC in any aspect whatsoever, because the regulatory has cleaned up. So then it's like, why would I want more overhead? You know, why do I want to launch a token and deal with all that on top of, we're printing 50 mil plus a year in fees to our 4, 5, 6 person team. Like, why would you ever want to change that? So I just don't think the incentive is there for most of these teams. And I think that's something that Pump is dealing with right now, is just kind of like, I don't know, you launch a token at this valuation, and I think we all assumed the buybacks would be a bit more steady and clear, and comms from the team would be a little more clear. It seems kind of like, in my opinion, a little bit of a bare minimum after you raise $1 billion publicly. Like, I don't think it's too much to ask for to be like, hey, what's actually going on here? There's times where you're just slamming 10 mil into the chart and then you don't say anything for a few days, and then like Alan's buying 0.9 Sol of like some shit coins that have been dead for a while, and they're going up 30%. Like, people are just kind of a little, I don't know, we're past the stage where you can just kind of launch a token and have it go up. It's been like that for a while. But Pump's just another reminder that like there has to be, I don't know, some type of reason for it to go up, which is good. But it's just kind of the stage of the market that we're at. The market demands more, and it's awesome to see. And Pump hasn't fulfilled that. And I mean, I'm sure you guys have seen it, but I mean, my group chats have just been filled like, what the hell is actually going on here? Like, why? What? We're going on a week and a half now, and it's just like nothing from the team. Like I said, the buybacks are sporadic and relatively small compared to what they've made. Just nobody has any idea what the token does.
Yeah, even though I don't really have exposure, I was kind of hoping it would do a little bit better because I want to make ICOs great again. But also to kind of bring it back to full circle when Danny was talking about clarity, and then Buck interrupted with Pump and then Pump Chain. Actually, a Pump Chain might not be that bad because, for the Clarity Act, they say that if you are quote unquote mature blockchain, then your asset might be treated as a commodity if certain conditions are met. So there's probably a way, if you already have a token and are going to go through that regulatory stress, there might be a little loophole to launch your own chain and become be a blockchain and make your asset considered a commodity, and then boom, you're in the clear. So maybe Bok is right with Pump Chain.
They didn't. There were some people talking about Santi on last week's Empire too. Like, there was a screen clip of him saying Pump Chain, and I think some people, I don't know. I think it just kind of added to the overall excitement heading into their launch. But yeah, it would be nice to see. That's for sure. I mean, some type of just direct comms from a team that raised $1 billion would be nice too. I feel like that's not too much to ask.
Yeah, I think there were some rumors a while back around potential Pump Chain, probably even before the sale and raise. But yeah, I think like this Clarity Act is an interesting like piece of that that could play in as well. If teams are basically like incentivized to launch a chain for the sake of like meeting regulatory requirements to not be a security, especially like when you already did the token and then you did a buyback, like that's got to now be like more front and center. I don't know if being based outside the US helps them at all, but at least if you want your thing traded by, broadly within the US on US markets, then it's going to be a concern, I think. Something else, maybe just a data point to pull up and where I could see this being interesting, but talked a lot about how like a lot of the flow is driven by the trading apps. And you can see like, so here we have launchpad volume originating from trading platforms to some of these major launchpads now on Solana, Pump.fun, Let's Bonk, Radium, Believe. And the interesting part is like what we see this shift here from Pump, which had been sitting in around like 50 to 60% of its volume being driven by these third-party platforms. And then when this kind of shift to Bonk and Radium happened, that dropped off a bit to 30-40%, while Radium itself has risen up, and Radium and Bonk both now are like 60 to 70% or more of their volume is driven from these apps. So they've just done a good job of like attracting these trading app users to kind of bid the assets on their platform rather than Pump. But I think like I mentioned before, like the interesting part about that is like I don't know if you can find a way to have the more interesting assets on your platform, or have like, the more compelling front end that traders are using, and, kind of incline them to route through, that your launchpad assets. I think this could, just as easily go a different direction, but the Bonk and Radium guys have been doing a good job. I don't know. I think we've talked about like the slop industrial complex before, like mass launching of tokens. And I do wonder if there's an opportunity to just like, if you're a launchpad platform, spin up your own kind of algo to just start spitting out these assets. Because if right now you've got these like, big major addresses that go and do that, and they launch thousands a month, why couldn't you just do it yourself?
Yeah, which my producer involved us into as well.
Yeah, the Boccaccio AI agent is
What's up? We're gonna get in trouble. Well, I don't think any of those guys are watching this anyway. So
When marketing, when are the raids, Bach? I was promised raids.
you were promised the what?
Raids, Twitter raids, Telegram raids.
Oh
Get
no,
the energy up.
no raids. Deb is dead. Deb is done. I'm
Bach,
wondering if,
before you go, do you want to talk about hype a little bit, and can you explain why to the people that the price is down?
yeah, when an asset goes up 60% in a week, it takes a slight stop because people want to take profit on the 60% move. Does this make sense to you?
So there's more sellers than buyers. That's what you're saying.
Exactly what I'm trying to say. There are a few more sellers than there are buyers. I'll probably head now, but I actually have a kind of a small question. Talks, you were talking about this. Is this general idea of on the live stream last one? You said meme coins will never die. Do you see us at least taking a slight break on them anytime soon? Or do you think they will? Well, to be honest, we haven't had the same amount of action that we've had previously. I think anybody who's on chain understands that. Do you think we go further down where it kind of just becomes the side of the market that is always there but is not as relevant as it was before, and then we start doing other stuff? Or do you see it coming back in cyclical ways that it previously did?
That's a good question. I probably think somewhere in between. I mean, even like in the live stream last week, like I said, I don't think they're dying, but there is very clearly like some ceiling that is there on the market cap that wasn't there before. So that doesn't mean that they have to die, but it also doesn't mean that, there's going to be runners that are 200 mil plus, that reach up to $1 billion. Like I think I want to say it's been like 6 months now since. I'm trying to think the last $1 billion runner on chain. It honestly might still be, I guess maybe the GOAT reach $1 billion. But anyway, I just think the ceiling can be capped, but there's some marginal level of like baseline activity that I don't think is going anywhere. I mean, you see it recently with Elon tweeting about those, the what is it, the AI image, they're the AI characters. Like, I mean, those tokens have done some pretty wild volume, but yeah, I mean, topped out at maybe like 75 mil, and in the past I would have thought much higher than that. So that's kind of what I'm thinking moving forward, is that there's just some base level of underlying volume and activity that isn't necessarily going away, and then there'll be some new meta that comes along. There'll be some GOAT that catalyzes the next AI meta. Like, it won't necessarily be the AI meta, but it kind of takes one of those going a little insane first. So that's kind of how I'm looking at it. But the volume, yeah, I mean, there can be months where, it's down month over month, and then something will come along, but I just don't think it's ever really disappearing.
Yeah, I agree. I wonder if it becomes like, how there's unfortunately always a baseline for NFTs and gaming as well. Like, there's always some idiot doing something on NFTs or gaming. But like the bottom is, let's say, at an activity scale, let's say it's like out of 100, they're like at a 5. I wonder if just memes just continue at a 15. And like you said, when there's a big token.
No, I think of it. Yeah, I think of more of like just parlays and like scratch off tickets. Like there's, around the Super Bowl, like betting volume is way up, and when the Powerball is at say whatever billion, like the lottery sales are way up, but like there's always some base level of people that, and that's where I think we've reached with meme coins, where it's just like this is just kind of a new form of online gambling, and in a sense, like online gambling going up is something I want to be long for the next, decades to centuries. Like, and I just think that this is the new form of online gambling, and so there's some base level of activity that will always be there.
Yeah, I think that makes sense. I wonder how that affects Sol if the base level becomes low and how everything goes. NFA.
I feel like the biggest product in crypto is still speculation, right? The best apps are perps, memes, leverage, treasury codes. Like we just want asset go up when we're long, and we want asset go down when we're short. Those have been like the most successful things. So I do agree with your point, Bach. I think there's a point that you're making that like the specific type of game that people play at a moment in time could change, right? That can be different. We didn't do like, we had NFTs for a little bit in 2021. Gaming tokens.
NFTs last year.
We had Pudgy went crazy. Like there were some others.
Ordinals. They went.
Ordinals.
Not as much, but they still did well.
Mm-hmm. The meme game has been like more persistent. Like it existed last cycle. It existed. I mean, 2017 ICO stuff. They were memes. Like, let's be real.
Can I make a very gentle argument here without offending anybody? What do we think of the argument that NFTs were a form of gambling with lotteries, like very clear loot box mechanics, gaming also because it heavily involved NFTs, and then could we say something of the sort of potentially memes are just one iteration of gambling within crypto that is continuously evolving? And like this right now, it's very clear to us looking back and saying, yeah, memes are the ultimate way to gamble. Dude, I love people like this new type. NFT was money laundering. Fantastic. You're the only one that's figured it out. Retarded. Great. Sorry, I'm having a bad day. Like what if like right now we look back at NFTs and we say, yeah, NFTs were like obviously dog shit. Like meme coins are a much better way to gamble, much better way to speculate. What if there is a better way to speculate as opposed to meme coins? In that case, they would go. Is this correct?
What does that look like to you? Because if you build it and there's a better way to gamble, then you can become a billionaire.
That's exactly what I'm thinking. So actually, let's start a live stream and let's start ideating.
Okay. No, I mean, I guess the pushback I would have to that is, I don't know, just the liquidity and I don't know, the nature of like not having a picture. Like Kobe has that famous line that like NFTs were just, meme coins with pictures. I think that's what he said, but like that kind of reinforces the underlying of people want to trade coins quickly, easily, with decent liquidity and a lot of volume. And so like I don't know what the next iteration of that could really be. But I also like have a personal rule that anything that is NFT related I've just ignored since 2022 and it's done me pretty well. So I just don't think about NFTs anymore. But yeah, I mean that's kind of how I would look at it. I can see your argument that maybe it evolves into something else, but like I just don't know. I mean, even like the earliest stages of crypto, like outside of BTC, like people wanted to trade other tokens. Like this has kind of been the underlying theme for, pushing on 15 years now. And to me, it's just kind of is what it is. And the meme coin, like kind of complex that we have now is just pretty close to the end state.
I'm gonna agree with that because if you look at meme coins, it's just under 1% of all meme coin traders actually make money. And that sounds bad on the face of it, but it's literally something like 135,000 times better odds than playing the lotto or, some scratch away ticket. So like just under 1%, let's call it 1%, is really good odds for gambling to make money. Like, you know, you in Europe when I play roulette, there's 1-0 and my odds aren't even 50-50. I'm scratching 49. So like, but meme coins are probably arguably a more fun way of doing it. You know, so I like that.
What are the odds on meme coins?
Like, well, I was saying 1%.
It's way less than 1%.
Well, I think here's the other part is that the odds change, right? And I think that's kind of what fuels part of this market, right? Is if you're hanging around in 2022 and you're trying to bet on the hottest new meme coin and the market is crashing, like your hit rate's probably going to be pretty low. But when you're hanging out post election and you're buying all the AI coins and they're all running, up in a straight line, your hit rate can be very high. And that's like that people see that happen and they jump in and like, yeah, some people get burned because they like buy the top or they buy after the run is complete. Or they try to keep hanging around and like bidding these things when maybe the momentum isn't there anymore. But I think that's a big factor is that like the success rate changes all the time.
Yeah. And I think it's like anything else in life. Like, if you put a little more effort in than just blindly buying coins, like, maybe you go from 1% to say like 25%. And that's entirely different. Yeah. I mean, just like on the subject as somebody who came from like making a living playing DFS and betting on sports, like my friends are obsessed with parlays and betting on sports now. And I absolutely hate it because like I know it was so much easier before COVID, like before, I don't know, just data and AI and everything. Like there was edges that you can tweak out that kind of models can't tell you. And I think meme coins are kind of that way in a sense. Like, yeah, only 1% wins, and I wouldn't advise a random person in the street to be like, "Hey, you should go gamble on meme coins because it's better than the casino." I mean, it kind of inarguably is, but I would also tell them it's like any thing in life or skill or gym. Like you kind of have to practice that a little bit, and like it's not just like immediately like you're going to go there and hit 100x. Like maybe there's a tiny chance you will, but like you can kind of just observe things for a little while and understand kind of the rules of the game and maybe raise that 1% up to, like I said, 20-25% or so.
Yeah, 100%. No matter how much effort I put into it, roulette always comes red. No matter how much I study martingale, it just keeps coming red. So I definitely agree with you there, Tokes. I do say like there's this line between gambling and speculation. I think it's like the same thing basically. But I think that's like crypto's three biggest features are speculation, stable coins, and scams. Those are like the three big S's. Like I don't know if anybody else thinks there's any other big feature that we have, but speculation is the number one.
Yeah, I think like a good parallel as well is like you look at traditional finance and like Robinhood has made a great business on trading equities, but like a lot of the retail people, like they like to come in and trade the 0 DTEs and their hit rate on those is very low. Like most people are just like chucking if you're trading those consistently, you're like chucking your paycheck in and probably losing it all. But I think there's a similar like aspect to it where there's enough to these systems where people think that they can like have or develop some kind of edge, whether or not they actually have one. I don't think it actually matters if they have an edge or not. They just have to think that they do. And you hit 110x or 15x overnight, and you're like, wow, this is amazing, and you keep playing the game. But yeah, I mean, I agree with a lot of the thoughts you guys both have there. That is something like options have never taken off in crypto. Probably just because there's so many assets and like just there's never been enough liquidity to like really get behind those things. I mean, I know like Bitcoin, there's a little bit of an options market there, but still quite small.
I think the options never took off just because like everyone always had perps.
Yeah.
So it's like, and like, I wouldn't take crypto people to be patient enough or savvy enough
Why not?
to price the options.
What do you mean?
Yeah. And like the guys that did get options like came in and made like a killing. Like to my understanding, there's like a very small subset of people that actually still trade options for crypto. But Maybe that will change. Who knows? Also, just kind of generally curious how the TradFi incumbents think about perps and stuff like that.
I think I was actually going to bring up options too, Danny, but like Ian, I think it might change. I talked about this app on this pod before called Euphoria. It's not out yet, but it's like a mega ETH app. And imagine you have the chart in front of you with little grids, and you just click, and then in your prediction, you just click somewhere you think the line is going to go, and you set your thing to like 10 cents. In effective, you're buying like 60-second option contracts without even realizing it, because for you, the user, you're just clicking, I think line goes here, I think it goes down, but I think that might be a fun, gambly, degenerate way to get like a lot more liquidity and options traders in the retail space.
Yeah, I've seen a couple
60-second options. Sorry, 60-second options.
Yeah, I think even less sometimes too.
Oh man, we'll just give them crack in that app too.
I think to their credit, they said they will not be releasing it with leverage.
Yeah, here it is. Well,
Okay.
I don't think this is not like full prod or anything, but like a little demo that's gone around. But like, yeah, you click squares, and then if you hit, you get paid out. But you can do this on like any time frame, basically, is the point.
Come on, how fun does that look?
It does look, yeah, the UI, it does look, yeah. I'm like, I literally, Danny pulled that up, and I'm watching, I'm like, shit, I should go long something.
Dude, you got to think this would one shot an entire generation of like Gen Z dopamine addicted, new traders. I think it does open the question though, like, I don't know, talking about options versus perps. There's been a little bit of conversation around. I just went muted. There's a little conversation around like, Coinbase, Robinhood, maybe like TradFi, brokers offering perps on potentially stocks, but like sort of bringing them over into the mix of products. It does make me wonder if like, the 0 DTE traders of today would perps appeal to them even more strongly, like, going 50x long versus, taking a, super out of the money strike for the end of the week or something. Hard to say. They're like slightly different games. And maybe that brings along like slightly different retail people, but I do think there's something there, like just in the way that the games are designed and like how people like to play them, and like how you get kind of caught up in the game, like based on your play style, essentially. Now it really sounds like we're talking about a set of casino games. I don't know. Do you guys think like if perps came to like SPY, you think that's more of a one shot for like equity retail traders than like 0 DTEs or like weekly options are? I'm honestly curious. Like I don't have a strong view here.
I think you'll probably have people doing both realistically. Like, I think there's like a nice Robinhood crowd of folks that has demonstrated a lot of desire to use those like OTD products, but I'm not sure how they would adapt to perps and stuff. But I think that'd be a really interesting market structure to see like form in real time, and also like kind of where it takes place, if it's like happening on chain or just like on one of these like Robinhood style products as well.
Yeah, I think it's hard to predict that. I do think like whatever perps product goes like insanely viral, I think there's something to, if you have ever bought, any type of option on Robinhood, the ability to simulate your returns at a future price, I think is like crack to people, where you can put in like a potential price that it would be at, and you can see but like a perp position, like you open that up, and it's just like you need the ability to have the math of like, okay, if I open a so long at 150 and it goes to, 172, like what do I make? But I do honestly think that is like a major part of the retail option craze, is just like you can click that option and then you can buy one, and then you can simulate your return and be like, damn, if this goes to X, I make Y. So I would love to see that feature in a perps product.
Yeah, unironically, I was talking about this with EverCap David from the advisory team and a few other folks just last night about options and pulling up the simulate returns feature on Robinhood. I think
See, it's like crack. Yeah.
I think a lot of the appeal, like especially when you're basically like doing relatively unsophisticated things, like, oh, I just want to like find a way to hit 100x, is like, you know, making the chart look like it's something that's possible. And I feel like you see that like on CT as well, right? Like people drop the chart for like their favorite meme or their favorite token, and then they like, you know, they draw the line and put their target like, you know, 50x higher, and they're like, yeah, we're holding until until this hits. But it's definitely a big piece of it is like how the game is presented.
To be
You
honest,
can just draw lines. You can just draw lines straight up into question marks too.
I do think it will keep option traders will still trade options. I do think it's probably more interesting for, like, we're just talking SPY, for those who use like leverage ETFs, because leverage ETFs, you know, those aren't instruments that are meant to be held for a long time. They have very high levels of like volatility drag that decay over time. So like I think people who want that leverage to these big instruments plus liquidity, I think, and I'm not just talking retail, I'm talking TradFi, I think it'll be a better instrument for them to express like higher beta plays on it than versus these, you know, these dodgy ETFs, so to speak.
How do we think, I guess another big piece of news, which I'm not totally convinced, there's been some conversation here, but like Trump supposedly, you know, going to sign some executive order to open up US retirement accounts to crypto. I'm not super convinced on like the actual meaning of this. You know, technically retirement accounts do have some access to crypto today via the ETFs if their like plan allows for that today. I'm not sure what opening that up broadly means, if that means like forcing, you know, 401k providers to like list crypto products directly for, you know, trade via these instruments. But I don't know, given the inflows on like ETFs in, you know, recent weeks, it feels like there's some potential for some, you know, retail excitement there. But I will say it does feel like I'd love to get your guys' thoughts here. Like it feels like the timing right now, like we're in a bit of almost like January of this year, where a lot of focus got to headlines around, you know, yeah, the US government is going to sign a bill and start buying Bitcoin. And now it seems a lot of the headlines around, you know, bills getting in through Congress and Trump's executive orders around crypto are like kind of back at the top of the feed, it seems like. Whereas they, you know, for a while that was kind of out of sight, out of mind, outside of maybe stable coins. Like there was a lot of excitement about stable coins a few months back, and then Circle kind of had its run. But now we're back on like crypto broadly, right? And a bunch of things are running. I don't know. How do we feel? Is this like, is it a little frothy? I mean, we talked about the Treasury vehicles, but I don't know if this like deep focus on, oh, he's going to sign an executive order and then therefore that's going to mean lots more inflows. I don't know. I think people are setting themselves up to be a little disappointed. What do we think?
Yeah, I think that's a great kind of analogy to make there to post-election, where it's like there was all that hype and then everything happened as kids. It's like everything got so good. It was like, okay, what can happen next, really? And it is kind of now at that point, I feel like we're getting all these good, we're getting the news before the actual action, plus like the kind of like just market exuberance, like the I mean, all of the charts just look insane right now. So I think we're bound to find like at least like a local top some point soon, um, and then like cool off a bit, I think. But I think right now there's definitely a lot of exuberance that mimics kind of the post-election feels, Danny. I don't know. Can anyone think of any like looming catalysts? As like obviously like momentum is a massive part of like markets in general. Um, but yeah, I mean everything looks great. Just feel like people are also quite excited, you know?
Yeah, it does kind of feel like just with the, I don't know, with the crypto week this week, I don't know, we'll go into August, and August is historically kind of a bad month and kind of, I don't know, last type of vacation type month people have before coming back to the office. But some of like, the that meme in the bottom of last cycle where it was just like endlessly over and over for every day, like how much worse can it really get? Like I try and think of that with news headlines and the positive momentum too. Like how much better can it possibly get? Um, and it can always get better, but it is kind of like, especially like this week, the news flow is just kind of, I don't know, we've just been stacking weeks and weeks on top of each other. And again, it's similar to when we're at the bottom and you're just like, it seriously can't, everybody's force liquidating everything. Like it really can't get that much worse. And I like to think of that towards the top too. So I think we're kind of personally like kind of in the earliest stages of that, but we're kind of running out of, like you said, Ian, like not that you need, specific catalysts to go higher. But we're kind of, we're really pushing the gas down on everything positive that could happen this year and kind of all shoving it into, front load in the first half. So we'll see. But yeah, and then as far as the retirement stuff goes, like, I don't know. I would personally advise not. And it's more so, it has nothing to do with like the potential of where I think, BTC or ETH or crypto can be in 3 to 5 years plus. It's more so just like, I don't know, people who put stuff in their retirement accounts, like, you shouldn't really be able to have like a 15, 20, 25% drawdown, like because of some leverage in a day. Because if like I would advise my parents to buy that, like I know it would go down 15% and they would sell it and then it would be back up, 15, 20% the day after. Like it's just not something that people should have in accounts like that, in my opinion.
Yeah, I think another thing that we kind of, as an industry, glazed over was the fact that like this wasn't just a crypto specific thing. It was like also to be able to access like private markets for retirement funds. And so like I think like if you're an allocator, it's like you have a much easier time pitching like allocation to like some of these PE funds, just given like there's been like a general uptick in companies staying private longer. So I think like there's obviously like some really valuable private companies, some of which got demonstrated at Robinhood's demo day. Like people like want access to these companies, right? Like,
Yeah.
and so I think like from an allocator standpoint, it's like, okay, like, yeah, you can do like crypto for, maybe like 1 to 5%. But also like you want to have access to like all these private AI companies as well. And all these other sorts of things. So I think like we as an industry totally just glazed over the fact that like, yeah, like that opens the floodgates, but it's still like at the discretion of people that are like managing a lot of these like retirement account structured products and like all these other things. Like, of course, they'll have the occasional ape, but like if generally speaking, I think if someone wanted to, full port their retirement account into crypto or some sort of crypto like exposure, all of those people have already done so, to my understanding.
Yeah, I mean, but it feels a bit like it's not like 100% allocation or 0% allocation, right? You can have like a 1 to 5% allocation to Bitcoin, I feel, and that still is meaningful if you take into account all the 401ks. Like, I don't think that would be like irresponsible. But I don't know what you guys think.
I think that's kind of what I think like Bitwise has kind of always set the standard there of like responsible portfolio allocation to crypto. They've always had some really good research on that. I think their range is like 1 to 5%. Crypto specifically, I'm not entirely sure if it was like Bitcoin specific, but of course, like there's a lot of other ways now, like with all like the like additional kind of like equity companies that you can get like exposure to that are like crypto companies. I'm not sure if they would throw treasury companies into that mix of portfolio allocation for crypto exposure.
We can just toss the treasury
yeah.
companies into retirement accounts and we can just absolutely moon.
Yeah, I mean, Pantera has like a fund of, to my understanding, it's a fund that only invests in treasury companies now. But I mean, Pantera's been in the game for a while. I mean, they were like the earliest, like Bitcoin liquid hedge fund. So I mean, clearly, they're more seasoned than some others that I think would maybe draw some eyes if they launch similar products.
Yeah, I do think there's a difference as well between, if target date funds start having like, 2-5% allocations to crypto, and maybe that's just like market cap weighted, so it would be largely Bitcoin, some ETH, maybe some of the alts and like a few percent of that. Seems fine. Seems like it. I think it's at a point where like it kind of almost makes sense to have exposure to an asset class that is this large now. But when if an individual goes and like self-directs, 60% of their portfolio into XRP or whatever Doge, and then they get a big retracement. I don't know. James Kristoff had a funny message in the chat earlier, like what happens when all the oldies ape their 401ks into crypto, and then we get a big retrace of the recent move, and they have to go back to work again in the current job market.
Then
but
we
I
can
think
finally, then we can finally buy their houses.
Yeah, they'll be selling their houses up for any price, any willing buyer. Maybe that's the solution, is to destroy them on a crypto pullback. I think Ian, you mentioned the private equity side of this, and I think the maybe the tougher question mark there is like, the really strong companies, the OpenAIs, the SpaceXs, like they don't necessarily want retail to be able to buy shares of their equity. Like, I don't know. I think the offerings that you might get, like without forcing companies to have to do so, are probably the companies that you don't necessarily want to buy or allocate to. And so there's almost like a self-selection bias thing here, where it's like, yes, we need to do PE in retirement accounts, but the only stuff that you can select from is all of the garbage that like couldn't find allocation elsewhere. And so that, I mean, there could be risk there as well.
Yeah, all the stuff that, PE has underperformed everything for the past 3 to 5 years, but now we can make it accessible in a retirement plan, so we can get some exit liquidity. It is funny about just talking about like kind of the owner base of what you would want for certain things too, and it just reminds me of that one tweet where it's just something like, the one guy who has like $10 in the token, he's the loudest guy in the Telegram. Like you start dividing these stuff, he's like pinging Dev, like, hey Dev, when marketing. I don't know. So that kind of plays a little bit of an aspect too. Like, again, it goes back to like what I want my parents to have, something that can go down 10-15% a day. And then I would think they would potentially, maybe sell it, and then it rips like 15-20%. Like sometimes assets are just, I don't know. There's a lot of different assets out there, and some of them you shouldn't just hold in certain accounts.
Oh yeah. Like when the stock market goes down like 2% on the day, everyone's like, holy shit, like it's over now. It's actually over. It goes down 5%, people are like, it's not looking good. So yeah, I mean, hopefully they like allocate accordingly. But really love the reference there to that, like that infamous, I think it was a Bob Lax tweet, Tolks, or it's like guy with $20 invested question for the dev.
Yeah, exactly.
Which is like unironically the beauty of crypto, though. Just like you can get access to the founder so easily.
Yeah, with $15 in it.
Imagine guy with $300 in Nvidia asking Jensen Huang when the buybacks are coming.
Yeah.
Like, come on,
Jensen,
man, I'm waiting.
Can you update the roadmap?
That.
Price is down 4% this week. Can you update the roadmap?
I feel like there's actually a relevant, like this week, did you guys see the Robert Leshner, the YHC, like attempted takeover of, what is it, Liquor House or whatever it's called?
Yeah, I was going to retire on it for one day, and then I wake up and I'm like, holy shit, I have to slam this after hours and get rid of it.
I feel like it's another, like not quite the same thing, but kind of another like similar scenario of, I don't know, maybe getting involved with something that isn't necessarily like in your best interest to get into. And I think obviously, like, I don't know, he's got an audience online, and, probably a ton of people just followed him into that trade when he posted he was like a majority shareholder. But it's really funny to like see that happen. The stock pumps up, and then after hours yesterday, he says, even though CT probably owns the super majority of the company, Waging a proxy or legal battle for control will be complex and time consuming, and I'm no longer seeking control. And I did not check, but I'm pretty sure it's down.
Yeah, it's down a lot. Yeah, there's a small group of friends that I have where I think heading into yesterday's close, we had, I don't know, close to 9-10% alone. So yeah, I mean, I had to liquidate that on that headline. But yeah, it just goes to just the overhang and just kind of what you have to deal with. Like it's just, I don't know, it's a lot. I mean, we were getting to the point where like, do we have enough to like, can we call a board meeting? Like, is that a thing we can do? But yeah, it just comes, I don't know. There's just increasing headaches to these things.
Yeah, I think Felix had a really funny tweet. Like, you know, the crypto, the Telegram chat learns what a poison pill is. The TradFi markets and the equity markets have they've got some movement that, like, you know, maybe people who trade crypto tokens aren't quite used to yet. Although I will say, like, a relevant one is like the Kronos token. Those guys, I think a few years back, burned like 70% of the supply, and then I think maybe a year or two ago, then like just went ahead and reissued it at some point, and like kind of re-diluting everyone after the assumption that like they were burned forever. So
yeah, I remember that. But yeah, I mean, it just goes back to kind of what James has said a lot too. Like, you know, all the excitement about Robinhood putting, you know, OpenAI and SpaceX on chain. Like everybody in crypto is like, oh man, this freaking rules. And it's just like, oh, actually, there's a ton of legal complexities like to how equities work because, you know, they've been around for 200 plus years and there's a lot of laws that have been passed to protect people, and it's like a little more complex than just being like, hey, let's toss SpaceX on chain and then everybody buys it and it goes up and everybody's happy.
Exactly.
I will say,
Yeah, I mean, I didn't know what a poison pill is. I mean, I'm not really paying attention to M&A space very much at all. I mean, in TradFi, so I mean, it's kind of it's definitely nice to know that a CTO in TradFi is not not that easy.
You can't just CTO the coin and update the deck screener and then you have control.
Makes me feel a little bit more secure in this whole market structure thing.
yeah, there's upside in being able to just like take a look, check the chain, man, and see, you know, which addresses hold how much supply, and, you know, if they're like bundled up or whatnot. But I do think there's something ironic here in that what Robert said about I learned a lot through this process about how opaque and ineffectual traditional markets are in tracking how many shares of a company exist. And then he said, unironically, this is something crypto fixes. Tokenized shares provide a real-time level of transparency. But I think the funny part of that is like not fixed in crypto is that for the most part, I think we typically don't know who owns how much or what of a token. Like there's often a lot of question marks around, you know, how much does the foundation own? How much are they selling? Like how much do the insiders actually own? Like have they sold? Are they selling OTC? You know, rumors around this stuff like kind of floats around, but there's a like pretty notable lack of clarity in many cases. You can check the chain, but like you're still kind of guessing for the most part.
Yeah, you can check the chain, but for a long time, like a lot of it was obfuscated for obvious reasons. But I mean, it goes back to, you know, launching the token transparency framework. Like that's an awesome thing for the space, and we need that. Like it shouldn't be that hard. Just be like, how much does the foundation own? You know, what is the actual circular? Like you shouldn't have to guess about these things. Like that's just table stakes.
Yeah, like it was it would be especially great for like new launches. Like I think for Pump and Tokenomics, you were kind of talking about this at the beginning. It's like it'd be nice to know what's going on with the company that just raised like, you know, like $1 billion of cash through like various
Ian,
methods. It's like
Ian, you're being ridiculous. You can just raise $1 billion in a public sale and then just, you know, be quiet on comms.
And then like we're all just in the group chat. Like I'm just like refreshing SoulScan, looking at like buybacks happening. It's like I guess they're doing buybacks. Do we know how much? Do we know how often? No, they're buying the token back. We don't really know what's going on.
When they want to clip
Mike Dudas is going to tell you to stop complaining about asking for information in any second now. Be happy you got the
I am
token.
somewhat of a spreadsheet jockey myself, though, so I do deserve that.
Yeah,
What's
too
going
many
on,
pencil
fellas?
pushers.
No Ivy League
Oh.
degree here.
You don't think there
unfortunately.
was enough clarity in his tweet when he just said "fuck it"?
When he said
Yeah,
JEW mode, yeah, that was enough for
man.
me. It'll
Come
look
on,
good
you
in
guys should have
litigation
understood
down the
exactly
road.
what he was going to do buybacks with that.
Man,
Did you see the
oh boy,
timestamp on that as well?
dude, that
The
this morning I
timestamp
saw
on
it
the
this
chart
morning.
is hilarious.
It was like
Yeah.
one of the first things I saw, and I was just literally just laughing at it. It was like, oh man.
Nothing better than beginning the day, getting conscious, and then seeing that chart.
It's actually funnier because it's like
Oh.
it lays bare that like their buyback is not some like carefully constructed mathematical process that's literally just like a 21-year-old kid with like $500 in the bank just like throwing it into a phantom wallet and saying, you know, rip it. It's just like really, really good.
Oh,
I
it's
had a
so
lot of
good.
confidence when I that wallet that they are using to buy back the tokens, they funded it and then they like put some fart coin in there. It actually might be the multi-sig where they're sending the buyback funds to. I'll have to double check that. I think it's the multi-sig. But I was
That
like,
sounds like
okay, that's
Bob
good.
Lax's haste project where he like yeeted it into Fartcoin.
Yeah. I mean, we're not far off at this point. Yeah, it'd just be nice
Oh,
to
wait.
know though. In general, it's like just tell us, give the market more information to work with here, because like I feel like the asymmetry is just like increasing by the minute.
Don't you
I think
think
we
that
should
partially? Sorry, go ahead, Tux.
I was just gonna say we should put Pump in retirement accounts though.
This
I
is
do
what
think a lot of
this is
it
what
is
our parents
intentional, though.
deserve.
Like, I definitely would suspect that they're being like somewhat clever with the token price and news releases, don't you? Like I alluded to it before. Like the second that a buyback starts, the token's going to go up like 25%. Like it would totally not surprise me to see them like let this thing crash to like 4.2, and they're like, all right, hey, here's an airdrop. Like you just have no idea what random like news drops is going to hit the tape and like just send this thing.
Well,
I'm
that's
surprised they
yeah.
didn't obfuscate it like via an unmarked wallet though. Like surely they could have pulled funds from a centralized exchange into like a fresh wallet and then purchased from there, and like then the market wouldn't, we wouldn't have been going around on Twitter like, yep, the Pump.fun team is buying back the token. It would have just been like big whale starts aping Pump. It kind of might take away some of that front running that basically has been happening every time they get in the order book.
Yeah, that's pretty wild. I mean, I think the James point, like a lot of, and the reason like I was bullish on launch was because obviously the amount of money that they've made, the amount of money they have for buybacks, like you would assume that a rational team, like after raising that much and launching the token, like would have some stuff lined up for, the week, 2 weeks after the token launch. But apparently that was a little bit too much of an assumption. And I do think there is going to be a day, I don't know, where it rips, 40, 50%, because of, whatever announcements, whatever, they say they raise the money for, when it killed Twitch and Facebook and like all these grand visions, like there's going to be some rollout of a lot of bullish news. But like, I mean, this chart it's literally one of the worst launches I can remember in a long time, when people were a lot of what I would consider very sharp people too were like, I don't know, like it's famous last words too, but I mean, once you get highly confident, like a large scale double, that's when you should be like, okay, what am I actually doing here? But yeah, I don't know. It's just kind of been, from my view, like just an absolute shit show from launch.
Yeah, it could definitely be better.
any bulls?
Yeah.
Are we looking at anything
Any
else
bulls?
then? Like outside of like Pump's kind of the big one. Plasma started their sale the other day after the lockup of stables for a few weeks. I don't know if there's any early data on like how filled out that has been. I was looking around, I didn't see much pop up there other than a few people tweeting out like, yeah man, I got in for X amount into the XPL
It
sale.
looks like I can share this dashboard, but I'll have to double check and make sure all this is correct. But right now it says like total reserved allocation 17.4 million, total committed 36 million, total remaining 32 million.
Did you guys overcommit for yours
So
just in the event that you can get like an extra fill?
I
it
did
looks like
not.
people
No.
did. I mean, the average oversubscription is 43.
Yeah, I did 50.
43x, and then the median is 1.7.
Yeah.
Yeah, I mean, I think people are excited about Plasma. I mean, the thesis is very simple of, tether chain. That's about as straightforward as it gets. But yeah, I don't know.
It's
Outside of
extremely
that,
funny
like
seeing people throw out comps of like, hey, this thing should be worth like 15 billion dollars because of
$60
Circle.
billion.
It's like great, I'm happy. I'd be thrilled, but yeah, I don't know.
Oh.
Yeah, you
No,
would
I mean,
need
I
Did you
think
the
guys
relentless TradFi bid to get it there, via
Yeah.
being listed in the equity markets, which it won't be.
Did you guys already talk the Treasury stuff to death? Do we need not touch it?
You can give the bear case for that, James. I think we yeah, you can give.
Yeah, get in here,
James.
James.
Sounds like you got something on the tip of your tongue.
Let's end on a crash out. I think that's like what everybody
Yeah.
wants to hear.
I
Yes.
guess like what's like I crashed out a little bit when I was talking to Mark, so sorry, Mark. But like what frustrates me is this comment of like there's no debt, like it's not a problem. And it's just like, dude, like this is just not how that stuff works. So like the best way to draw an analogy is like a strategy called like closed-end fund arbitrage, which like whatever this firm Saba is huge in it. Like you target entities that have more assets in their balance sheet than they're trading for publicly, and you buy them for the public price, and then you bust them open and you sell all the crap inside of it, and that difference is your price. And arbitrage, as the people like to call things in crypto these days, it's not just like this company is trading at $100 and it's got $120 worth of Bitcoin, so I'm just going to buy the shares and just hold it. Like there's like that presupposes that it's impossible for anything to ever trade at a discount because someone would just bring it back to par because they're nice. Like that's not how like that trade works. Like it only works if you close the loop by selling this stuff at the end of the day, right? So like that's how a lot of this stuff breaks, is they just trade very cheap and they need to sell treasury assets to buy back stock to bring it back to par, or someone else comes in and tries to do like a tender or something like this, or they force a proxy and they force the company to liquidate. Yeah, I think it's like just crazy maddening, to be totally honest.
Are you saying if everyone is nice, then the prices can just go up for forever?
No, but like that, like you say that tongue in cheek, but like that's like legitimately the
Oh, I
investment
know.
thesis
I
of a
know.
lot of these companies. It's like it's literally like no one sell. It's like 3-3, and like
I was about to
these
say that. 3-3.
like there's
baby.
just like 8 million of these companies, and they're just all doing the same thing, and every single like thought leader is like, wow, they've reinvented finance with a new arbitrage technique. And like why I crash out so hard on this is like just replace Bitcoin with like Microsoft or anything. Like Bitcoin is not a special snowflake that lends itself to being a quote treasury asset. It's just a risk asset. So like if you just create endless SPVs to buy up like tractor trailers and you're a tractor trailer reserve treasury, like it's the same thing. Nothing about this is unique. It's just unique because it's an asset that's going up. And it feels really fun when it's going up. And I forget, Danny, you might have said it to me before, like the cost basis for like so many of these treasuries is literally like $118,000. Like it's incredible.
Yeah, I think the tough part here is that Saylor and strategy, like he's been in this game for so long, like kind of by himself, that he's kind of hanging out. And even though his average cost basis is much higher now because he buys every top, it's still only like what 70K. Like
Yeah, he's got a lot of room.
realistically, like he can hang out. Like we could pull back 40%, and he's kind of hanging out. But all of these brand new ones that just launched in the last month and then raised $500 million and then aped it into the market, like if they're Bitcoin treasuries, they just bought the actual all-time high.
Totally.
So any pullback is going to look really rough for them.
And I literally love, like, hats off to him. Like that podcast with Ben and the other dude at Parify was like awesome. It was like a great podcast. They were just like super transparent. Yeah, I would love to do the pipes because they get like phenomenal terms, I would never touch this like garbage in the public markets. Like kudos to him for being transparent as to how the trade works. Like love it.
See,
Yeah, I had a little
I think
quote
that's
to
one
use
of the
here.
yeah.
Thanks,
Go ahead, Dan.
thanks to Yano. I was just gonna say thanks to Yano for bringing them on. But basically, the rhetoric was like, "Yep, we buy the things and we all hold on to them for a while, and it goes up. But as an insider, like that's cool, and I'm ready to dump whenever I'm unlocked. But I wouldn't buy these on the open market, like you said. Can't wait to dump on all of 3 heads.
It's seriously, it's one of the most personally, like I think under discussed aspects of this whole thing is how much the insiders and like early funds, whoever are launching these things, like how much money they're making. Like it reminds me of why alts have been down for, like 3 years straight. Like it's literally just that strategy of we can raise at a valuation that we know the public market is going to bid or it's going to go up on public valuation, like how alts used to operate. And it's just the new flavor of alts for a lot of, I don't know. I mean, to me, like a lot of the crypto VCs are excited about it because like they can't make money on alts in public anymore or private.
Yeah, and dude, this is not dissimilar from a lot of the funds that were going to like Celsius and BlockFi, and they were getting borrow on BTC, and
Yes.
they had a 6-month lockup on newly seasoned Grayscale shares, and then they dumped them. Right, like it's not exactly the same trade. Obviously, it's like not a formal pipe, but it's a very similar structure. Right, it's like it's locking up coins and selling them at a premium, and the premium eventually will not exist
No,
despite
it stays
despite how
stay
confident
premium
people are.
forever.
Yeah.
The first time I was like genuinely worried about the treasury companies getting out of hand was this week when I saw like this post on LinkedIn, and it was my fault for being on LinkedIn in the first place. But
You deserve it.
It was this exactly. It was like this broccoli head like Zoomer kid, and it was like this kind of classic LinkedIn slot format, and it was like I recently took a risk to leave my position at Morgan Stanley. It's like he's like the first year analyst to take like the bold decision to become CEO of a public company no one wanted to. And it like lo and behold, now it's like some the treasury company, but their whole thing is they're buying a bunch of assets. They're not just buying like Sol exclusively or something like that. It's like our stock is up 1,300.
Oh, they're diversified.
Yeah, exactly. And I was like, this is crazy. But Far
can we talk? Sorry,
which,
guys.
I mean, this is another thing that just kind of surprised me. Is like, if you guys had to guess how many treasury companies for Bitcoin specifically Farside tracks, what would your number be? And this is across all markets, not just U.S. markets.
Say like 110.
No, oh damn, you would say that. I would say my first guess was 27.
Danny?
I think that the tough part is there's a bunch that are companies that actually make money, and then they buy
like
some
Riot or
Bitcoin.
something. Yeah.
And then the ones that like we really are concerned with are the ones that are like a failing company that then raise funds and buy. But it's got to be a good chunk now, like 30, 50 plus.
Yeah, you and Tolks are close. James is maybe just foreshadowing. They have 34 on there, which is still I think like quite a lot. But like there's really like size wise, it's really like strategy and then like Metaplanet, the Japanese one.
Yeah, I was just saying Metaplanet. Yeah.
Yeah, they actually.
Can we talk for a second about Leshner's Liquor Company and like everyone on CT finding out that companies like can in fact issue more shares and dilute you, and like just Felix had a tweet on that. Like I guess there was a chat that he was in where the guy was just like stunned that this could happen, and like it's just so good.
Yeah, we talked about it briefly earlier. I said it was my retirement plan for a day when it went up 175%, and then after hours, it was not my retirement plan anymore.
Yeah, didn't have much to add there, James, unless you've got more quips
No, I
about
just
it. But yeah, I think
I just
it's
thought
just
it was
another
funny.
case of like uninformed retail, like kind of jumping in. I do think it's quite similar, honestly, to like following like pick your favorite EKOL into a coin that they shill on Twitter, and then being kind of like surprised Pikachu face when that thing goes down a few days later. I think pretty similar though.
I've had enough like non-serious, non-value added things. I will try to say something, at least what I think is somewhat serious.
On the
Of
treasury
like,
stuff though, what's relevant is like just like the ETH ones have also been like SBET has kind of been going on a bit of a tear lately. And the other day they announced another up to $5 billion share offering.
Yeah.
Interestingly enough, the stock is down like 8% today, 7% today. So, the other thing is it looked like it was kind of maybe forming a little bit of like a local top or rounding off a little bit off of its run from a month back. So it almost makes you wonder, like, is the share offering just an attempt to like get a little more retail in and it didn't pan out yet?
I guess what I'm like, I have no view and no inside knowledge as to like when. Like, I think timing this is like next to impossible. The one thing that I do have a strong view is like I don't think any potential unwind that may or may not occur like will be slow, like a drip, like Grayscale. I think it would be a lot faster this time around. I think that the capital is a lot flightier, and I just think like the structure of having this within empty shell vehicles will lend itself more to stuff unwinding in like a shorter time frame. Because if you effectively think they're all doing the same thing, like their MNAVs are all going to get blown out at the same time by relatively similar proportions. And I think there might be like, a rush of these treasury companies that they want to be the ones that sell and buy back the stock first. And then obviously if everyone does that, it's not a great result.
Are you saying the door is small on the way out?
Yeah, I think it's way smaller. I mean, like what Grayscale gave you like a great view as to when you probably should have exited last cycle, but like you could do it over a huge time frame. I think this window is much, much smaller.
I could see that, yeah. I mean, especially once you start wrapping various alts into these types of things too, like the liquidity and the depth is obviously way worse than BTC. Like you could see some, I don't know, you could see some wild candles there.
Yeah, and like if you remember like the capital markets window for SPACs, last time around, like that window closed very rapidly too, right? Like that was like an absolute mania for all this stuff launching and having a lot of flows from retail. That closed very, very quickly.
It's kind of funny
Should
as
be
well
fun.
because like IPOs have been doing very well lately. And actually even the crypto IPOs have too. And yet we're still like I don't know, we can say whatever we want about Circle's valuation, but if you just bought that thing, I mean, it went up a stupid amount. You didn't have to even buy a crypto treasury company. You could have just bought like the one crypto business that went public this year.
They're doing a USD treasury company, USDC treasury company.
Infinite buybacks.
Arguably the most stable one.
Yeah, that one is the Circle trade is hilarious though, because I think like literally everyone like actually in crypto faded it. Like when their like S1 came out, everyone was just like, like they barely like Coinbase makes more money from their product than they do. And then like public market investors are like, yeah, like 300 seems like a good price target for this. Yeah.
Oh,
so like
I tried so hard on Robinhood.
Sorry.
I was trying to shove like 100K into their IPO. Like I didn't really care it was overvalued and stuff, just because I don't know. I thought markets were kind of right for it, and like it is just like a close your eyes proxy to crypto. Like public markets are ripping, and then Robinhood filled me on 33 shares in total. I was like, oh, sick. But I definitely didn't think like I would have been out at. I think that the original IPO price was like 25, and then at the end of when Robinhood raised it, it was like 33, 34. So I think that's like what I got filled at. But I was selling. I mean, I was gonna sell everything at 50. So it's not like I would have enjoyed this ride either. But
I mean, that's still really good. I mean, for I think you read that really well then.
Well, they only filled me on 33 shares, so it was worth, about $900 worth of good reading.
Yeah.
But yeah.
So Danny, I just pulled up. Oh, sorry.
Go ahead, James.
No, go for it, Talks. Finish. Sorry, I interrupted you.
No, I'm done. You go ahead.
I was just gonna say, Danny, like when you were just talking about IPO activity, like this is stuff that I track because I think it's useful to give an idea of like general capital fundraising and how frothy or non-frothy we are.
Yeah.
So like if you look at IPOs raised over the last 10 years, so 2015 we had 39 billion, we peaked at 335 billion in 2021. So like our previous point before of like that being the peak mania. And then we obviously collapsed in 22 at 23 billion. Like it has picked up to a degree, but it still is not great. Like 2024 was 40 billion in total. So like capital markets to private companies are still not like wide open of like, hey, wave in any garbage. Like it's quite selective in what's coming to market. And that's obviously both on the supply and the demand side, right? Like companies like Stripe just don't want to go public. So that skews it a little bit. Um, but it's just interesting to look at that kind of stuff for like a gauge of risk appetite and how much stuff is actually coming to market, and then try to think about how that affects like longer tailed assets like crypto treasury companies.
Yeah, I think that makes a lot of sense. I think like the thing that I was more pointing to is just like, and I think we've talked about this before, and it's been a topic of conversation in the industry, but like crypto equities have kind of been just like outperforming crypto assets in recent months. But even just like going out and buying like basically anything that's IPO'd this year has been kind of like up only charts across the board, at least from what I've seen. Like a lot of the big names have just kind of been having a great time. And there is a little bit of that same, like you can look at the CoreWeave financials and be like, man, like maybe it's a bit like extended based on their revenue today or like their growth projections. But like if you brought that view to like the Circle IPO, like we said, you would have been like the rest of CT sitting around sideline. Meanwhile, the thing went and like did 10x the IPO price, just because I don't know, the equity markets are looking great and like people want to be allocated to some of these things. Meanwhile, if you sat around like trying to be long your favorite alts, like a bunch of them, I mean, until recently, a bunch of them kind of were struggling throughout the earlier part of the summer here.
Make it all back in 1 week. But yeah, I mean, even today, you have Coin and Galaxy and Hood hitting new highs today. Circle up a lot too. Yeah, I mean, I don't know, it's interesting.
Maybe I mean, crypto treasury vehicles are just the revenge trade, right? We all missed out. Nobody sold the top. They didn't buy the bottom. They didn't buy Circle. And now it's like, come on, man, I need this one last exit pump to make generational wealth.
It normally works out well, right? For all parties involved.
Yeah, I'm pretty embarrassed by some of the stuff that I hold in my brokerage account, to be honest. It's really ugly seeing myself own these companies. Yeah, to be clear, I'm long some of these treasury companies as well.
Yeah, me too. It's a little nasty, but it is what it is.
Yeah, I mean, I said it before. I feel like they've replaced memes to an extent, like within the markets. It's like people are seeing the headlines for these things, and then they rip 5x, and it's like, well, I want to bid those. I don't want to buy. You know what I mean? Like people are having a tough time in the trenches as of late.
It's also just the size of U.S. capital markets. Like it can never be overstated. Like it just goes back to, I mean, what we've seen with the ETH rally this week and the inflows there, and like even the launch of the BTC ETF before it was launched. Like I don't know, some people had some kind of small projections on it, and like the appetite was, I don't know, was 10 bit at best before launch. And it's just like, yeah, of course there has to be some demand, but like I don't think you guys understand the size of these markets compared to what crypto was back before the Bitcoin ETF launch. Like it's just, I mean, we're talking, several orders of magnitude of difference. Like it's unfathomable to somebody who spends all their time in crypto, and especially kind of like the overseas aspect of crypto. Like it's unfathomable how big these US markets are.
I like it. Well, I think we've gone long enough. We're stretching for other topics. Appreciate having you guys on. The Wolf Swap dev team, always shipping, always putting out great content and product.
Yeah, new roadmap.
Really excited
next week too.
Really excited for what we can accomplish in H2 of this year. I know great things are coming for Wolf Swap, even if great things maybe aren't coming for the rest of the crypto markets. We'll have to see.
The Talos integration will be spoken about.
It's a hard shell.
I can read out the CA as well.
All right,
So
see you
it's
guys.
start with-
Yeah, can you send me the contract address?
Don't read out the CA. Thanks for coming on, guys. Had a great chat today. We'll see the rest of y'all. Check out the 0x Research Telegram. We'll all be in there shit posting until we all die.
Have a good weekend. Yeah.
Have a good weekend. Don't crash out. And
try to touch some grass. As always, I'll say on Fridays, try to touch some grass on the weekends. It's good for you, and stepping away is good. So everybody enjoy the weekend.
Good call out from Tokes. Definitely touch grass. And thanks for watching, guys. We will see you next week. What?